Welcome to Moneylife. This is Sucheta Dalal. This week, we are going to talk about the collapse of New India Bank or New India Cooperative Bank and all its repercussions. So the question is not that the bank has failed. New India Cooperative Bank is a 28-branch tiny bank in which most people are going to get their money back because many have deposits which are less than 5 lakh, and 5 lakh is covered by deposit insurance guarantee. Now, why is this worth a discussion? Most of you who have followed what happened to Punjab and Maharashtra Cooperative Bank know that this is the next big one after that. Why is it big? Probably not because of its size, but because of the fact that this was started by the former defense minister and late firebrand socialist leader, George Fernandez. So it had a much higher profile. Now let's cut to Valentine's Day. It's not a gift that any of the depositors were expecting. That morning, they were standing in a queue trying to withdraw their money because the Reserve Bank of India had just announced that it had dismissed the board and imposed strict operational restrictions on the bank, which means that it could not make any loans. More importantly, it could not return people's deposits. We've written extensively about it, and you can see it in our articles here. Almost immediately after, it transpired that this was not a simple bad business collapse. There was a massive 122 crore fraud. 122 crore is a tiny number today as compared to the size of frauds you see, but in relation to this bank, which had 130,000 depositors, it was big. 90% of the people have less than 5 lakhs in the bank, but that this huge amount could be stolen and gone undetected for a long time, right under the nose of the Reserve Bank of India, which is India's monetary authority and banking regulator, is worth a discussion. Now, RBI is all out to cover it. So you go to the DGCI website, you will see a flash which says people are going to get their money back almost immediately, no waiting for the bank to get into liquidation or anything. These days, money is paid out almost immediately. So 90% of the people are going to get their 5 lakh back. That's all they had. So they're going to get most of it. RBI has also said that they will increase the amount that can be withdrawn, and there will be swift disbursements and special withdrawals for medical emergencies and weddings. What really does this mean? It actually ensures that the New India Cooperative Bank fraud quickly goes out of the news cycle, fades from public discourse without proper scrutiny or accountability. And key point, that there will be no real investigation into the Reserve Bank of India's lapses or any examination of whether whistleblower warnings by former employees were ignored by the banking regulator. Let's track this a little bit. Moneylife is probably the only publication that has consistently tracked RBI's action against cooperative banks, and there are many. We have a special hashtag on our website to talk about it. You can go and look at how many are penalized almost every day and every month. So the question is, why did New India Bank escape scrutiny for so long? The last major fraud, like I talked about earlier, is Punjab and Maharashtra Cooperative Bank, which was PMC Bank, we call it. This was in 2020. It's an extremely well-run bank, never took holidays, worked long hours. People trusted it so much and lost their money. The outrage was enormous. In fact, Moneylife Foundation went out of its way to try and help those depositors at that time. What was the government reaction and RBI's reaction? Quickly diffuse the tension by saying, we are hiking the deposit insurance guarantee from 1 lakh to 5 lakh. Remember, it had been frozen at 1 lakh for a long time. So it suddenly goes to 5 times, 5 lakhs, a lot of appeasement, because over 90% of the depositors that way got their full money back. Again, money was paid out without waiting for any liquidation. This is the first time that RBI also implemented what is called a bail-in, which is that large depositors have to help when the bank is in trouble. What they did in this case was that PMC Bank, instead of liquidating it, was allowed to be merged into Unity Small Finance Bank in 2022. And large depositors were told, if you want your money back, be patient, We will pay it to you in installments over a 10-year period. And in the meantime, you will get only 2.75% interest. Rather than lose all their money, depositors had no choice but to accept it, and they did. So that is what is called a bail-in. You want to know what this is? I have discussed it in the past extensively. Again, that's not the issue over here. What is important is at that time, the government did something very interesting. It cut through all the political pressure to end dual regulation over cooperative banks. Remember, cooperative banks are highly political. Almost everyone is controlled by a political party, and this is across the political spectrum. So this needed a lot of firm handling to be able to say, we're amending the Banking Regulation Act in 2020, September 2020, and all cooperative banks will be under direct single point supervision of the Reserve Bank of India. We were all high praise for it. So all urban, multi-state cooperative banks, all of them came under RBI supervision. RBI seemed to get very tough day after day. People were either being penalized, or if they were so loss-making, they were shut down. And like I said, we created a special hashtag to write about this. All the string of penal action, almost 3 a day. Come back to the question, then why did this 122 crore fraud go unnoticed? How did RBI inspectors, despite direct oversight, miss a massive embezzlement of this amount relative to the size? Remember, only 28 branches in Maharashtra and Gujarat. Turns out that Hitesh Mehta, NICB's general manager and head of accounts, had been up to mischief, some say with the chairman. There are whistleblower letters to this effect. And he was arrested soon after. The arrest by the Mumbai Economic Offences Wing is supposed to have released that he was actually carrying away lakhs of rupees in his backpack over the years. He had over 5 years to do it. He had also diverted 70 crores to a real estate developer called Dharmesh Pawan, who's also been arrested. Now, there are all kinds of shady loans apparently to other real estate developers, which should have raised alarm bells. There was a huge amount of cash in the bank. Why did RBI fail to detect any of this, including lax internal controls? They do annual inspections. So more details of the bank again have been written about extensively by Moneylife in our articles. Then there were whistleblower letters who say that they had been talking to RBI for several years. They are ex-employees of the bank who said that there were high cash balances even while reserves were dwindling ever since 2021. The bank began to report losses, 23 crores in FY 23-24 and 31 crores in 22-23. RBI did not enhance scrutiny. There was staff turmoil. Any number of people were apparently sacked. Relatives were posted in. And while the bank is not making money, it reported high cash balances, which eventually turns out did not exist because it had been carried away in a backpack. RBI was caught sleeping. Ex-NICB employees also warned RBI as early as Jan 2020 about fraudulent loan write-offs and said, order a forensic audit. If all this is true, it raises serious concerns about the accountability of Reserve Bank of India inspectors. The regulator had already found that PMC Bank was acting like a personal private piggy bank of the Vadhavan family of Housing Development and Infrastructure Limited. The promoters then spent a long time in jail. So dodgy loans to realty companies, also dodgy companies, ought to have rung alarm bells and triggered an immediate detailed forensic audit. Nothing of that sort happened when apparently there were whistleblower letters. Why? So rather than reviewing inspection failures, RBI and the government even today seems to want to deflect attention. So a Reuters report after the collapse of New India Cooperative Bank is quoting Union Financial Services Secretary M. Nagaraju as saying that another hike in deposit insurance is under active consideration by the government and may be notified. Now, such a hike is well feasible. You know, the Deposit Insurance and Credit Guarantee Corporation, which nobody knows about or hears about until a bank collapses, is very well funded. It is funded by premium, insurance premium paid mainly by public sector banks, foreign banks. Every bank has to be part of it and they pay a premium. But who gets the money? The only banks that seem to fail with astounding regularity are cooperative banks. So money is collected for everyone. It's paid out for cooperative bank failures. This shields bank depositors because you now get up to 5 lakh bank. The government has its way, maybe increased, but it also covers up the inefficiency of regulators from the consequences of their action. This big question that I'm repeatedly asking, what were the inspectors doing? Why did they not act? That gets buried under the carpet. It was not even asked in PMC Bank's case, where RBI employees and RBI officers also lost money. Now, in October 2019, I'd written an article where I said that this whole deposit insurance system is flawed and it needs correction. Why did I say it? Because DICGC collects hefty premiums. Payouts are tiny as compared to the amount. So can it be increased? Yes. It also then recovers debt from those who owe money to these failed banks which are under liquidation and retains that amount. In fact, look at the numbers. In response to a Lok Sabha question in 2022, the government said that DICGC settled claims of 4,055 crore on account of 35 banks that had been placed under a moratorium by the Reserve Bank of India. Every one of these was a cooperative bank. What is the size of corpus that the DICGC has? According to their website, as of now, it is 1,98,753 crore. 63% of this money comes from bank premiums, 37% from the interest that's earned on this big amount. Now, in 2023-24, DICGC settled claims of 6 liquidated cooperative banks, 21 banks under what are called all-inclusive directions of the Reserve Bank of India. What was the total amount paid? Only 1,300 crore. So just a drop. Now, with such a large reserve, doubling the insurance limit from 5 lakh to 10 lakh is easily possible. Are people going to be happy? Temporarily. Because you will take this off. They'll say, oh, look at the government. It's giving 10 lakhs per depositor, but it doesn't change two basic questions. First, will it make all depositors happy? No. Depositors are nervous. In fact, they want a 100% deposit insurance guarantee. Actually, it's not feasible. And it gives a free pass to bank scamsters. In fact, it is feasible because you don't expect banks to fail. But it also means that there is no accountability on the part of people who are supposed to supervise and regulate banks effectively and prevent banks going bust. On the other hand, bank unions have long argued that they are the biggest contributors, public sector banks. They contribute this fat premium and they should be exempted from doing it because no public sector bank is allowed to fail and it's never liquidate. This is a flawed argument because the government of India and we, the people of India, pay one heck of a lot of money on behalf of all the mistakes of PSU banks. They constantly recapitalized at the cost of the exchequer. And this is after they keep writing off bad loans for large industry. 16 lakh crore has been written off for the last 10 years. So this argument doesn't hold water. Can 100% guarantee be done? Yes, it can. But it is a policy of robbing Peter to pay Paul. Take premiums here. If the bank collapses, you return all the money. No questions asked, no accountability. A bank failure cannot be treated like this. It's my view that a bank failure should be so rare that it is treated like a plane crash. What does that mean? That when there is a plane crash, there is a mandatory investigation that covers everybody involved, whether it's regulators and those who are supposed to look at timing and landing and every single thing, not just the plane and the pilot. This is a formal, transparent process. This should happen with banks as well. It should include a forensic investigation. It should question the inspectors of the RBI, ask them what did they find, what was hidden, why did they not find what they should in time. And this should be under the Joint Parliamentary Committee for Finance of Parliament, because accountability must be to Parliament. In the absence of such a process, RBI's reaction to every crisis, government's reaction, is find a way to pour cold water over the outrage, get it out of the news, and focus on self-preservation rather than meaningful reform. This defensive posturing includes appeasement like hiking deposit insurance or faster disbursement of insurance proceeds, all of which is happening now. We are actually in a very good position to do something about this, like they did after PMC Bank. Former RBI Governor Shaktikanta Das, who spearheaded the post-PMC Bank reforms at the RBI, is now additional principal secretary to the Prime Minister. He's in a unique position to push for real change, ensuring that banking oversight isn't about damage control, but about preventing failures in the first place and ensuring accountability on everybody's part. Until then, depositors will continue to suffer, and every new crisis will follow the same cycle: fraud, failure, and a patchwork fix. It's time we get out of it, because we as depositors want to feel safe about our money and want to feel safe about the fact that RBI inspectors are doing their job, and if they don't, they will be accountable. If you agree, don't let this go. Ask questions. Thank you so much.